Part B of the question reads as follows. S and M are advocates operating under the name SM Advocates. The firm's trial balance for the year ended 30th June 2022 is as shown below. They are talking of costs charged to clients through to capital. Of course, the trial balance has been given and it is balancing. We are at 1,518,000 and also 1,518,000. Additional information. It's estimated that debts amounting to 16,500 are uncollectible and should be written off. Depreciation, that is number 2, depreciation should be provided at the rate of 20% per annum on the book value of the furniture, fittings, and library books. The uncompleted work on 30th June 2022 was valued at 70,500,000. Required statement of profit or loss for the year ended 30th June 2022 and the statement of financial position as at 30th June 2022. So this question was under preparation of financial statements from other entities, and more specifically it's about professional firms, and this is a firm for advocates. So we'll go straight to the first part of the required, that is Roman 1. SM Advocates. SM Advocates. Statement of profit or loss. Statement of profit or loss. Statement of profit or loss for the year ended. For the year ended 30th June. For the year ended 30th June 2022. Great. So shillings. Cost charged to clients. Cost charged to clients, that is the same as professional fees. So we are going to use as it is. Costs charged to clients. Costs charged to clients. Same as professional fees, 750,000. 750,000. Add work in progress. Work in progress. Work in progress carried down. A work in progress carried down is the same as additional information number 3. And completed work, that is 7,500. 7,500 less work in progress brought down. Work in progress brought down is the same as the work in progress balance brought down on the trial balance, 110,400. So this one is going to be deducted. So that is 750,000 plus 7,500 minus 110,400, 710,100, 710,100. That is like total income. Total professional fees for that period, less expenses, less expenses. The first expense is office expenses. Office expenses. The office expenses amounted to 25,500. 25,500. Postage, telephone and internet. Postage, telephone and internet. So postage, telephone and internet amounted to 54,600. 54,600. Printing and stationery. Printing and stationery amounted to 105,000. Printing and stationery. Rent and rates. Rent and rates 180,000. That has been given us 180,000. Salaries to staff. Salaries to staff 216,000. Salaries to staff is 216,000. And finally, the expenses on the trial balance have been exhausted. We move to the additional information number 1. There is irrecoverable debts. Irrecoverable debts. Irrecoverable debts amounted to 16,500. And finally, depreciation, which is being provided on furniture and fittings, and depreciation is at the rate of 20% per annum on book value. 20% per annum on book value. So we have the figure of furniture, which is of course at book value. So that is 20% times the value of furniture is 135,000. 135,000. That will give us 135,000 times 20%, 27,000. 27,000. Once you have the expenses there, it is 25,500 plus 54,600 plus 105,000 plus 180,000 plus 216,000 plus 16,500 plus 27,000. This is 624,600. 624,600. And profit for the year. Profit for the year. The profit for the year is 710,100 minus the answer 85,500. 85,500. So that was the statement of profit or loss for that professional firm during that particular period. That takes us to the statement of financial position. SM Advocates. SM Advocates. Statement of financial position. Financial position as at 30th June. 30th June 2022. As at 30th June 2022. So we have assets, or before assets we can bring in the two columns. And non-current assets. Under non-current assets, we have furniture, fittings, and library books. furniture, fittings, and library books, furniture, fitting, and library books. Now let us compute the book value for the same. The cost is 135,000. Remember, the cost was 135,000 minus depreciation, which we've computed as 27 minus 27,000. That is the depreciation that we even computed in the statement of profit or loss. The book value is 108,000. 108,000, and that is the only non-current assets. Current assets. Current assets. We have the first one being work in progress, carried down, work in progress at the end of the year. The work in progress at the end of the year, in additional information number 3, was 7,500. We have receivables. Receivables amounted to 234,000. 234,000. Cash at bank. Cash at bank. Or before we record cash at bank, receivables is to be affected because there was irrecoverable debts. There was some irrecoverable debts, so this one is going to be reduced. So that is 234,000 minus the recoverable debts of 16,500. 16,500. So that is 234,000 minus 16,500, 217,500. 217,500. Then there is cash at bank divided into 2. There is client and there is office account. Client account and office account. Client account is 74,400. Office account is 167,100. 167,100. Any other current asset here? We have disbursement on behalf of clients. 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 36,000. 36,000. Disbursement on behalf of clients. 36,000. So the total assets. Total current assets 7,500 plus 217,500 plus 74,400 plus 167,100 plus 36,000 565,500 565,500 565,500. Total assets. Total assets plus 108,000 673,500 673,500. From that point we move to capital and liabilities. Capital and liabilities, and we have capital. The capital account stood at a balance of 612,000. Add profit for the year. The profit for the year was 85,500 less drawings. Drawings amounted to 180,000. Drawings amounted to 180,000 and they are to be subtracted. So that is 612,000 plus 85,500 minus 180,000, 517,500. Non-current liabilities, and non-current liabilities were not there, so it's going to be nil. Current liabilities were given as follows. We have clients for monies held on their behalf. So clients for monies, held, of course, on their behalf, for monies held on their behalf, amounted to 74,400. Creditors, 81,600. Creditors, 81,600. Total is 74,400 plus 81,600, 156,000, which gives us the total capital and liabilities. Total capital and liabilities, which is 517,500 plus 156,000, you get 673,500. 673,500. So, learners, that is how the question was supposed to be handled. That is for financial reporting August 2022 question 4, which combined lease accounting IFRS 16 and also professional firms in financial statement of other entities, and more specifically professional firms. See you again in our other subsequent revisions. My name is Nicholas Sikali.